For the first time in a long time, emerging markets have outperformed their domestic peers. So, what's happening? Well, you'll find out right now on UBS Trending. Hi, everyone, and welcome to UBS Trending. I'm Anthony Pastore. Thank you so much for joining us today. I am here in the studio with my CIO colleague, Alejo Cherwanko. Alejo, thanks for joining me. Good to see you.
Thank you for having me. It's great to be here.
This story about what's going on with emerging markets from 2025 through so far this year has been really compelling. As I mentioned, it's been outperforming its domestic country peers. For the first time, really, in about 10 years, this performance is actually happening. What's going on here? Because there's a lot to unpack, but I just wanted from the top just hear what your thoughts are on why we're seeing such outperformance on the EM side.
It had been a long winter, if you think about it, right? But that kind of stopped a year and a half ago. And in 2025, you saw emerging market stocks outperforming U.S. stocks by a wide margin, 35% for the year versus 15% for the year. And so far in 2026, the outperformance has been massive as well. And I think this is part of what we're calling the great broadening. It's not just that the market will rely on performance of hyperscalers and chip companies in the United States. There is earnings growth in Europe, in Japan, and in emerging markets. There is AI adoption in the developing world, and there's disruption when it comes to geopolitics that is forcing people to look outside of the United States and diversify geographically, including emerging markets.
Well, I mean, I think that kind of begs the question from a U.S. perspective then, when you're looking at the U.S. side, and we know markets, they have been a little bit volatile. There's a lot of talk happening around AI and energy and software. What is it that's so attractive outside the U.S. for investors that they're looking at emerging markets versus what they can invest in here stateside?
You got to look at the U.S. macro picture. Historically, at least, when you have a soft U.S. dollar, when you have easy money, when you pair that with strong commodity prices, people tend to gravitate towards emerging market assets, and that's what we have today.
Right.
And we think we'll continue to have weaker dollar, a Fed that is cutting rates, and commodity prices that continue to traction.
Right. And you and I have talked about this in episodes we've done in the past, always talking about emerging markets, that they have benefited from resilient growth and sort of easing monetary and fiscal policy. So knowing all of that, it does make sense then that it would be attractive, obviously, for even a U.S. investor to invest outside. And as we always say, having a diversified portfolio and having an allocation in some percentage to EM is a smart move, especially these days.
That's right. And then there's the geopolitical angle.
Right.
When the world is looking at food security more seriously, energy security, technological security, think critical minerals, financial security, think precious metals, right? And so which countries are the largest producers of these commodities? It's typically the emerging markets. But emerging markets is not just commodities, it's also technology.
Right.
When you look at the leaderboards of LLMs, large language models out there, it's the US and it's China. When you look at key inputs of production of the AI supply chain, it is Korea, Taiwan, and other emerging markets as well.
Yeah. Just rewinding for a second, because you talked about precious metals, we can't not talk about commodities, especially something like gold. Gold in 2025 had an incredibly strong run. I mean, high double-digit percentage increases. And even this year so far, the metal itself is up already around 20% since the beginning of January to where we are today. Since we're seeing commodities take a bigger role in investment portfolios, what role does commodities then have in an emerging markets play?
EM is partially a derivative of commodities. Again, because you have countries like Brazil or countries like Indonesia that are key commodity producers. So you can get exposure and make a levered play on the commodity developments, right? So, but more fundamentally, you got to go back to a world that is changing mindsets, a world that is a new mercantilism, prioritizing security over efficiency. And that's where commodities play a much stronger role.
Yeah. I love talking about this with you because it is an area, as an asset class, that is starting to get a lot more attention than maybe it even did a year and a half ago.
But it's still underappreciated.
Exactly. That's why I think it's so important to sit down with an expert like yourself and get rid of the noise that you might hear on some of the broadcast news channels. Listen to someone like you who sits in here every day. You visit these countries consistently,
yes, a lot
so
has
you know
changed.
What's going on.
Definitely.
Yeah. Alejo, thank you very much. Good to see you.
Thank you for having me.
Thank you, Alejo Chawanko from the Chief Investment Office. And thank you all for joining us. There's a lot more information coming out of our entire CIO. You can visit our website. It's our insights page at ubs.com/views. Plus, you can follow UBS on social media. We're on LinkedIn and Facebook. Plus, our dedicated Instagram channel at UBS Trending has a lot of great content there for you. So please give us a follow there. And as always, if you do have any questions about your own portfolio or anything that Alejo and I spoke about today, make sure that you are chatting with your financial advisor. Until next time, I'm Anthony Pastore. We wish you a great rest of your day. And remember to keep your eyes on what's trending. We'll see you soon, everybody. Thanks.